Welcome to the deep dive, where we take your sources and really try to unearth the most important nuggets of knowledge. Today, we're tackling a fascinating research paper that kind of flips conventional wisdom on its head. It asks this really counterintuitive question. What if uncertainty, the very thing that makes most businesses cautious, actually makes a specific industry speed up?
Yeah, it's a really compelling paper. We're diving into oil at risk, political violence, and accelerated carbon extraction in the Middle East and North Africa. It presents this surprising mechanism that impacts global energy supply and, maybe more critically, climate change.
Right. So our mission today is to unpack this core theory, explore the evidence they present, which seems pretty powerful, and really understand what this means for you, for all of us, in terms of global economics, security, and, yeah, the environment. I remember reading that quote from Ian McCready at Shell, something like, "It is a very uncomfortable situation to produce oil with guns, and we don't like it." But this paper asks, what if that discomfort, that risk, actually makes them drill faster? Okay, let's unpack this a bit. Normally, we think uncertainty, like political instability, that slows things down, right? Companies get hesitant, they pull back investment.
Right, that's the standard thinking.
But this paper says maybe not for things like oil, these exhaustible resources. How does that logic work?
Well, it actually builds on some pretty established economic theory. You've got Hotelling's rule way back in 1931. He basically laid out how owners try to maximize value by smoothing out extraction over time. Don't pump it all at once.
Okay, standard resource economics.
Yeah. Then Long in 1975 extended this. He suggested that if owners face a rising chance of losing their property down the line, maybe nationalization, maybe instability, then it's actually rational for them to increase short-term output. Pump more now to hedge against that future uncertainty. It's essentially the use it or lose it principle.
Use it or lose it. That's powerful. It makes me think, I've heard about the green paradox, this idea that even climate policies, like announcing a future carbon tax, might accidentally spur more production right now. Is this related?
That's a really interesting connection. And yeah, Sin, back in 2008, he explored that green paradox. That's risk-induced extraction. But the risk there is policy, future taxes, regulations.
Yeah. Right. Policy risk.
This paper takes that same core idea that risk speeds up extraction, but applies it specifically to the risk of political violence. When your actual property rights are threatened because the state might collapse or your assets could be seized, well, the incentive to get the oil out of the ground sooner rather than later becomes incredibly strong.
I see. So it's applying that use it or lose it logic to a different kind of threat, physical insecurity and state instability.
Precisely. It closes a feedback loop we maybe haven't focused on enough, especially regarding climate.
Okay, so if this theory holds, where would you expect to see it happening most clearly? The researchers focus specifically on the Middle East and North Africa, the NAA region. Why there?
Well, MENA is kind of the perfect storm for testing this for a couple of key reasons. First, just the sheer scale. The MENA states, they hold something like over 57% of the world's proven oil reserves.
Yeah.
Huge players. Saudi Arabia, Iran, Iraq, Kuwait, UAE, Libya, Qatar. The list goes on.
Okay, so the resource concentration is massive.
Exactly. And second, unfortunately, the region experiences very high levels of political violence. It actually records the highest severity of political attacks globally. So you have this intense concentration of oil wealth combined with very real, tangible threats to stability and property rights.
Got it. But here's what I found really interesting in the paper. They focus on a specific type of producer. What makes these particular oil producers so vulnerable to what they call violent hoteling pressures?
Yeah, that's crucial. It comes down to their structure. The study specifically looks at national oil monopolies.
Okay, state-owned companies.
Right. Unlike, say, a big multinational corporation that might have assets all over the world, can diversify, maybe shift capital if one place gets too unstable. These national monopolies are fundamentally tied to their territory. Their main assets are the oil in the ground, the pipelines, the refineries, the local political connections. It's all immobile, illiquid.
They can't just tack up and leave.
Exactly, they're stuck. So this fixed nature makes them incredibly vulnerable. If they perceive a rising risk that they might lose control of that oil in the future due to violence or instability, their rational move, according to this theory, is to extract as much as possible, as quickly as possible.
Okay, that context makes a lot of sense. So the theory is set, the location is relevant. What did they actually find?
They looked at data from 1996 to 2014, right? combining oil production and political violence data.
Yeah, and the findings strongly support the hypothesis. They found that when political violence increases, these national oil monopolies significantly increase their oil production.
Really, a direct link. A direct, statistically significant link. Specifically, an increase in the frequency of attacks. Just more attacks happening leads to higher production. They estimate an additional attack can bump production by about 0.24 to 0.27%. And this isn't just immediate. The effect shows up and persists for like 6 to 15 months afterwards.
Wow. Okay, so more attacks equals more oil pumped. What about the severity? Like the number of people killed in these attacks, does lethality matter too?
That's one of the really interesting nuances. On its own, the lethality, the number of kills wasn't a significant driver across the board.
Huh.
However, and this is where it clicks back to the property rights idea,
Right.
they found the effects were much stronger when the violence specifically targeted the institutions of the state.
Ah, okay. Not just random violence, but targeted attacks.
Exactly.
Yeah.
Attacks and kills targeting the police led to increased production, and attacks and kills targeting the government itself. That had an even stronger impact, roughly 3 times the effect of attacks on police.
So it really confirms that it's the perceived threat to the state's ability to maintain order and secure those property rights. That's what's driving them to pump faster.
Precisely. It's not just chaos. It's chaos that threatens the owner's long-term control.
Okay, that's a pretty striking finding, but whenever you see something like this, you have to ask about other explanations, right? Did they test for other factors? Like, could it be the other way around? Does more oil production somehow cause more violence? The whole resource curse idea.
Yeah, absolutely crucial question.
Yeah.
They did test for that rigorously reverse causality, and they found no significant evidence that oil production itself was driving political violence or terrorism in the specific context and time period.
Okay, so it seems to be violence influencing production, not the other way around.
That's what their analysis points to.
What about other things, like maybe world oil prices are fluctuating, or maybe countries are pumping more to pay for increased military spending because of the violence?
Good questions. They check those too. World oil prices, interestingly, weren't a significant short-run driver. It seems these producers don't just immediately ramp up production the moment prices spike. Their decisions are maybe more strategic or constrained in the short term.
Mm.
They did find a link with equity markets, though. An improving S&P 500 looking back 12 months was associated with more extraction.
So maybe extracting more to invest the profits when global markets look good.
That's one interpretation, yeah. Reinvesting the proceeds.
Mm-hmm.
But importantly, regarding the military spending idea,
Yeah.
they found political violence did not significantly predict military spending in their models. And even when they controlled for military spending, the main finding violence driving oil production still held strong.
So it doesn't seem to be about funding the conflict directly.
The evidence doesn't support that mechanism, no. They also looked at things like violence spilling over from neighboring countries. Contagion effects didn't find a link. Used a broader political risk index, still found higher risk meant more production. Even big shocks like recessions or the 2008 crisis didn't change the basic relationship.
Wow. So they really tried to rule out the obvious alternatives.
It seems quite robust based on their checks.
Okay, this deep dive has definitely revealed a dynamic that's, well, it's powerful and maybe a bit concerning. So let's step back. What does this all mean for you, the listener, for these big global challenges like climate change? What's the takeaway?
Well, the implications are pretty significant, I think. This accelerated extraction, driven by these violent hoteling pressures, it essentially floods the market with more carbon faster than might otherwise happen. So it directly makes the climate change problem worse. It's a mechanism for increasing greenhouse gas emissions that we haven't really fully appreciated or factored into models, perhaps.
An under-the-radar accelerant for climate change, driven by instability.
In a sense, yes. And it really highlights a crucial point. Secure property rights aren't just good for economic stability. They might actually be beneficial for climate stability, too. It suggests policymakers need to think more holistically. Climate policy can't just live in its own silo. It's deeply interconnected with security and governance.
So strengthening stability and the rule of law in resource-rich regions could actually be a form of climate policy.
That's a potential implication, yes. Ensuring a more secure system of property rights could, indirectly, help mitigate climate risk by reducing this incentive for rapid extraction.
That raises another question, though. This study focused on national oil monopolies because they're kind of stuck, right? Their assets are immobile.
Hmm.
What about multinational corporations, the big international oil companies? They have portfolios all over the world. Would they respond the same way to violence in one specific place?
That's a really important point, and it's one of the limitations the authors acknowledge, and definitely an area for more research.
Hmm.
You could argue that multinationals have more flexibility. They can shift capital elsewhere, potentially divest from risky areas rather than doubling down on extraction. So the response might be weaker or just different.
Okay, so the effect might be strongest for these state-owned players.
Potentially. Also, we have to remember things change. Many MENA countries are actively trying to diversify their economies, move away from fossil fuel dependence. How that plays out in the future could alter this dynamic too. Past behavior isn't always a perfect predictor.
Right, future diversification efforts could change the calculation. What an eye-opening deep dive, though. It really hammers home how interconnected global security, economics, and the climate challenge truly are. So today, we've really peeled back the layers on this pretty surprising finding. When faced with violent uncertainty, at least some major resource owners don't hit the brakes, they actually hit the accelerator. It's a powerful example of how the fear of future loss can speed up consumption right now, with potentially massive consequences for the planet.
Hmm.
So for you, the learner, maybe the thought to chew on is this. How does this challenge our basic assumptions about risk? About how resources are managed in a world that seems increasingly volatile and interconnected? And maybe where else might this use it or lose it dynamic driven by insecurity, not just economics, be playing out in ways we haven't quite noticed yet, just below the surface?